Hello, and welcome to the BNP Paribas Asset Management Talking Heads podcast. Every week, Talking Heads will bring you in-depth insights and analysis through the lens of sustainability on the topics that really matter to investors. In this episode, we'll be discussing environmental investing strategies after the U.S. election. I'm Daniel Morris, Chief Market Strategist, and I'm joined today by Ed Lees, co-head of our Environmental Strategies Group. Welcome, Ed, and thanks for joining me.
Hi, Daniel. Great to be here.
I think it's safe to say, Ed, our outlook for the future has changed over the last few weeks, and arguably more in the area around environmental strategies, climate, energy, and transition. Across the spectrum, investors are having to have a rethink of what are the implications. Let's start with the biggest worry investors might have. I mean, is environmental investing over?
This is the question that's on everybody's mind. And it is an important question. What I'd say is that Trump requires a pivot, but he does not represent the end of sustainable investing. So why is that? Well, a couple reasons. One, the reality of climate change remains, and that needs to be addressed. The U.S. federal government is not the only regulatory force in the USA. States have their own agenda. For example, 37 states have a state-level renewable portfolio standard, which is driving utility behavior to meet regulatory objectives. And economics matter, of course. Solar in most places is the cheapest form of energy, and battery costs and technology keep improving rapidly. So there's no wonder why it's growing as fast as it is. Of all the new energy capacity build out in the coming years, we expect about 80% to be taken by renewables because of economics. Now that's just going to accelerate. Let's not forget that this is an area where tech is advancing in a way that coal and gas isn't. Lithium-ion batteries, battery storage, this is the key thing to smooth out intermittent power and what's really going to unlock renewables. There's exciting stuff going on here. Many companies have sustainability programs and net zero targets. Amazon, net zero by 2040. They're the largest renewable buyer in the world with a 77 terawatt hour portfolio. Apple, Google both want to be carbon neutral by 2030, and Microsoft, they want to be carbon neutral by 2030, but then go further and remove all their historical emissions by 2050. So pretty incredible stuff. Couple other quick things I'd say. Many sustainable themes are linked to strong market trends. The need for energy security argues for domestic power sources, including renewables. The world needs more power, in large part due to the growth of AI. Green power is a clear beneficiary. We think that power demand is likely to double through 2050. With this power demand comes the need for grid modernization. Also in the sustainability universe, energy efficiency is a way to make our power resources go further. That is going to be a key area for sustainable investing. Certain areas like sustainable water management are core to society and should rise above politics.
I think we've seen over the years, Ed, that when the subject is Trump, people kind of leap to the most dramatic negative potential scenario. The U.S. is going to withdraw from the Paris Agreement. Trump's going to entirely reverse the Inflation Reduction Act and all the measures. Maybe you can give us a more balanced and calm assessment of what really is likely from the administration.
There's a lot of worries out there right now, and some of the stocks in this area are trading like that. That's creating some interesting situations, particularly because it might not be as bad as some people fear. There will be scale back. There's going to be likely less offshore wind. EV tax incentives will go. That's going to impact EV charging. Areas that need more support are going to be at risk. Things like green hydrogen might face some more headwinds. Let's get into this in a little bit more of a granular way. We can get at least some evidence from his appointments. At the Environmental Protection Agency, or EPA, we've seen Lee Zeldin being appointed, and he's very consistently talking about deregulation. And that will loosen some of the restrictions on companies, but as a representative, he supported clean water initiatives as well. The Secretary of State, Rubio, a China hawk, so expect tariffs. That's going to impact some of our markets too, where China's a material part of the supply chain. It could be good for companies that have heavy domestic manufacturing and production. Through that, we've seen a couple areas where there's some potential rays of light. Trump has split and sometimes ambiguous views. He has consistently been anti-wind and EVs, but he's made more supportive comments, particularly recently around solar and clean water. He has recognized that he might need to be more flexible because of his partner Musk. We'll see. We suspect that he'll take a scalpel instead of a sledgehammer to policy. This is in part because much of the IRA promotes American industry and jobs in red states, and also the influence of Musk. Musk has a big solar presence through his battery and inverter business. Musk has said that solar will be the main source of energy for the world in the future. Our conversations with corporates who do business with Musk indicate that the main solar tax credits could be shortened to 2028 instead of being canceled. We think some additional mechanisms are probably at risk, the ones that are linked to climate justice, but the main one for domestic content is likely to stay. This is very much in line with the strategic objectives of promoting the USA. This is a policy that's fueling made in the USA, including many new manufacturing jobs there. We actually had 18 House representatives that wrote to the Speaker previously asking to preserve the IRA tax credits for precisely this reason. There is already a demonstrable core of Republicans that want to maintain some of these tax policies. What else? Well, I'd say areas like nuclear, blue hydrogen, grid, and domestic production and manufacturing are promising. Trump is likely to take money away from the Department of Energy loan program and the loan program office, but he'll also put more money into the system by reducing corporate taxes. Trump's first administration, remember, did not stop energy transition. Renewable energy finance doubled actually from $16 billion in 2016 to $29 billion in 2020. And if one just wants to look at the markets, for what it's worth, the Invesco Solar ETF was up almost as much as 6 times the S&P over that time period. It's despite Trump, probably more than because of him, but it does speak to the fact that there are other variables that are important that are involved here, not the least of which is economics. Remember, under Trump's last term, coal retirement actually accelerated and renewable installation was at a record high. A big talking point for the Republicans has been permitting reform. Permitting reform can potentially be good for renewable projects as well, and this could speed things up. That's really exciting. Some of our companies' trade-like environmental policies are going completely away, and they won't. Areas here will recover when there's more clarity, and that opens the door for opportunities.
Thanks very much. Hopefully our listeners feel a little bit better now after hearing that explanation of how things might evolve. How do investors need to pivot, though? What are the areas that they should be looking at now, given the landscape you anticipate?
That's the key question. And I'd say that investors should be paying more attention to profitability, narrowing their focus to companies that have financing and have a reliable path to profitability. The idea that the government will help me until I start making money 5 years from now, that's a harder path. We think that the U.S. is an exciting, dynamic place to look at relative to Europe and Asia, in part due to tariffs. Some industries need a lot of power, so independent power producers. Data centers is a huge theme, and where that overlaps with sustainability is energy efficient infrastructure, data center cooling and water supply, even energy efficiency in the chips themselves. We've seen a number of deals announced in this space over the last couple of months with large tech companies looking for more power. Solar energy as well, particularly utility scale. Those are interesting. Grid build out and energy storage, related areas, and food security and agriculture. In the U.S., farmers are a big lobby, and being on the right side of them is usually a good thing politically. So I think those are some of the areas where we still see opportunities and investors might look.
If I can summarize some of the points that you shared with us, if there may be just one message you want to leave with our listeners, it's that Trump is not the end of sustainable investing. There are other countries in the world. There are other parts of the U.S. government. There are U.S. states that are still very much committed to this area, and you certainly firmly believe it's going to continue to grow and continue to be a profitable area to invest. Arguably, one of the fundamental drivers in all of this is that energy demands are going to continue to rise, and renewables inevitably have to be a part of that. Well, Ed, thank you very much for joining me.
Thank you, Daniel.
That's it for this week's episode of Talking Heads. If you would like more information, please reach out to your BNP Paribas Asset Management contact or check out Viewpoint, our website for investment insights at viewpoint.bnpparibas-am.com. We recommend subscribing to Talking Heads on your favorite podcast channel, such as YouTube or Spotify. You'll receive your podcast episodes every Tuesday afternoon. If you like Talking Heads, leave us a positive review and a nice rating. You've been listening to the BNP Paribas Asset Management Talking Heads podcast with me, Daniel Morris, and Ed Lees, co-head of our Environmental Strategies Group. Please do join me next week. Until then, take care.
This presentation includes a discussion on current market events and is not intended as investment advice or an offer of products or services, by BNP Paribas Asset Management. Please keep in mind that the information and analysis in this presentation is only current as of the publication date.